Good morning, treasurers. This is your host Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. Here is all what you need to know before going into trade for 12th November 2020 in the international market on account of US Veterans Day. US bond markets were closed yesterday. We at Knight Research House feel that US 10-year yields will cross 1% psychological mark very soon. Please note that there will be many stop losses hit after 1% mark breach, and that can push yields a little bit higher as well. As of now, US 10-year yields are hovering around 0.98 percentage points. In the crude oil market, crude is now trading at $43.99 per barrel. Structurally, we still remain bullish on crude with $50 per barrel target. Crude's short-term range seems to be in the range of $41 to $45 per barrel. In the currency market, dollar index or DXY is at 93. DXY's today's range seems to be at 92.32 to 93.15. All the downside for dollar seems to be limited for now until the new fiscal stimulus talks resumes. New fiscal stimulus, if any, will take the dollar index below 90. But in the very short term, dollar index will be range bound. USDINR with a high of 74.40 closed at 74.33 yesterday. USDINR's range for today seems to be 74.30 to 74.55. We expect 74.40 to act as a center point, and USDINR prices will hover around in the range bound market. In the domestic market, Indian 10-year 577 GS 2030 closed yesterday at 590 versus 592 of Tuesday. We spoke about 592 offering a very strong support, and market reversed from that level. If 592 is broken on a closing basis convincingly, from a technical perspective, we see 598 offering a good support at the next level. CPI numbers are due today, which is Thursday. In September, CPI was at 734. Economists' expectation for October 2020 CPI is 740. As we had done the CPI scenario analysis, let's do that once again. Scenario number 1, CPI print coming 770 and above, which is an unlikely scenario. Yields can go up to 598, where the major next hurdle is. CPI in the range of 720 to 760, which is a most likely scenario. We expect no major yield movements. And CPI falling below 680, which is again a very unlikely scenario. Markets will be buoyant and yields can go up to 586. Trading volumes are thin as traders are sitting out on Diwali festival season and waiting for the CPI numbers. There is no major market moving news, and markets will be mostly range bound. Use our intraday trading ranges for making some quick profits. That's it for today. You were listening to Night Snippets with Parthesh Shah, co-founder of Fintech. See you tomorrow with the new episode of Night Snippets.